Welcome to Welcome to Fundamentals for Startup, a CoMotion Labs production. My name is Sari Vimon Chalao, CoMotion's lab manager for the Hardware Incubator, and I am your host for today. CoMotion Labs is a multi-industry incubator program hosting early-stage startups and innovations from both inside and outside the UW community. We provide critical infrastructure and opportunities for learning, mentoring, and networking. And we are always looking to connect with founders in life science, hardware, and tech. Fundamentals for Startup is an open lecture series on topics related to entrepreneurship. Every week, we bring in experts to share insights, inspire action, and offer space for questions. Subscribe to our YouTube channel to find all the Fundamentals for Startups presentation, and visit CoMotion's website to keep up with future events. Today, I'm excited to introduce Candi, Avery, and Jen Keller from the accounting and consulting firm Clark Nuber. They'll talk about practical strategies for compliance with government regulations and necessary tools to optimize your SBIR or STTR grant. Welcome, Candi and Jen.
Good morning, everyone. Good afternoon. Let's see if this... There we go. Okay. So welcome to SBIR, STTR Success, Mastering Post-Award Compliance and Project Management. My name is Jen Keller. I'm originally from Delaware. I was in the Peace Corps in Niger, and I focus on federal grants management now. Everything pre-award through post-award, closeout, indirect cost rates, helping answer those technical guidance questions when it comes to both financial and programmatic questions you might have with a federal agency. And in my personal life, I have two kids 10 years apart. That keeps me pretty busy, and I enjoy traveling. And I'll pass it off to Candi.
Good morning, everyone. Actually, good afternoon now. I am Candi Avery. I work in the audit practice at Clark Nuber as a shareholder, and I specialize in working in the life sciences, both with a lot of nonprofit research institutes in the Seattle area, but I also spend a lot of time working with our commercial or for-profit entities that receive SBIR or STTR funding. So happy to be here. Today's my 25th anniversary at Clark Nuber, so I'm glad to be spending it with you. And with that, we'll go ahead and get started.
So our learning objectives for today are to come away with a basic understanding of common pitfalls and best practices to comply with the financial compliance and grants management requirements of SBIR and STTR grants. And we're going to go into what those are so you know how to avoid them and how best to put your programs into action so that they can be successful. The overview, we'll start with going over the requirements, key personnel on both the grantor and the grantee side of the house, as well as the common problems around payroll, cost principles, indirect cost rates, procurement, subrecipients, and then we'll talk about some additional resources you can use to help learn more to support your activities. So kicking it off, we will talk about the uniform guidance. So with SBIR, STTR funding, there are 11 agencies that give out these type of awards. Each agency will have its own individual requirements and interpretations of some of these requirements that we're going to go into today around the uniform guidance. You may have a grant or you may have a contract. We're going to focus on the grants today. The grants are governed by the uniform guidance. We have one slide on contracts, which follow the federal acquisition regulations. In most cases, they're very similar, but the federal acquisition regulations are definitely more robust and can be a little more to learn about and maximize when it comes to putting those into best practice. So with the uniform guidance, also known as 2 CFR Part 200. It's broken out into different subchapters with definitely some additional appendices and bonus material, all for your viewing pleasure. So starting with acronyms and definitions, nothing we love more than acronyms and definitions, so that's an important section. Followed by general provisions. This is both on the grantor side of the house as well as some things for the grantee, but you can see how those actions are happening on the grantor side, definitely in those general provisions and pre-award and federal requirement sections. Then the pre-award section, it tells you how they're going to release, or how they should release, the timing around the release of notice of funding opportunities, which are those announcements, advertisements for funding, how you are applying, what the grantor is going to be reviewing, going through kind of this risk assessment that they do on grantees to see what the risk is around providing the money to you. We'll go through some of those later on today, all the way through that award phase. So awarding you the agreement, the negotiations that happen around that award process. Going into the post-federal award requirements, it's kind of a misnomer. This is actually where the things actually start to happen. This implementation phase is what they call the post-award phase, everything through closeout. Then you have the cost principles that tell you how to treat the different items of cost that you might have under your award. Definitely dig into that today. Your audit requirements, contract provisions, what you need to have in your contracts with your contractors. That's what's outlined in the appendices there, as well as how to negotiate an indirect cost rate, and things of that nature. And then finally, because sometimes there are some gray areas in here, we need a little bit more information on how to interpret these gray areas. We have the frequently asked questions guidance, which kind of elaborates upon those items and tells you how to treat them. On the grantor side of the house, we have 3 important individuals to get to know. I always say it's really important to get to know these people, to email with them, have them become your friends, because they're going to help you be successful. When I was working on federal grants, I had one of these individuals, one of the grant management officers, actually say to me, my job is to make you bulletproof when it comes to single audits, when it comes to compliance. I really appreciated that. I haven't heard that from a lot of people since then, but I like that that is their goal and what they should be doing for you. So you have the grant management specialist. That's the individual who's going to kind of see you through that pre-award and awarding phase. So if you have questions while you're creating your budgets, while you're creating your activities, when you want to know about allowable activities, that's when you're going to seek out this grants management specialist. When you have more questions about in the operations, when you've gotten your award and you're in that post-award phase, you're going to become good friends with your grant management officer. They're the ones who you're going to contact if you need prior approval for certain items, which are outlined in the uniform guidance as needing prior approval. If for any reason your PI, your principal investigator, leaves, you're going to need to let them know, because they're going to have to approve that they're leaving and that you can still keep your award, because they want to make sure that you can still do what you promised you could do. So this is very important. And then the program official answers your scientific questions. So they're more your programmatic guardian angel, helping you discuss those items. Maybe if you have a change of scope. Remember, you have some fluctuation depending on the federal agency, how you move items of cost around from your original budget. But if there's a change in scope, there's never an occasion where you can change that without informing your the federal agency, the grantor. So you're going to want to get prior approval for any changes in scope that might occur. And then on your side of the house, you're the grantee, you're the grantee organization. It's important to remember, so a lot of people conflate the idea, or they merge the idea that grants and contracts are the same thing. They use the term interchangeably, and I'm kind of a stickler for this. There are a lot of similarities, but they're not the same thing. So you are the grantee. You are signing, in most cases in this realm, you are signing a grant agreement, which is different than a contract because it's governed by different regulations. It's governed by the uniform guidance, but it is still a legally binding agreement where you are promising to perform not only the financial requirements under these grants, but you're also promising to perform on the activity side. So you're signing this saying that you, to the best of your ability, will complete these activities in regulation with all of the requirements that are dictated in your grant agreement. So there are kind of three things that you always need to look at when you get a grant. You need to look at that grant agreement, you need to look at the uniform guidance, and then you also need to look at any federal agency specific guidance. We don't want to make it too easy on you, so we've spread it out across 3 different documents, but you need to be aware and looking at all 3 of these items when it comes to effectively managing your grant. So you're the grantee. And then you also have this principal investigator, which is accountable for the research and takes direct responsibility for completion of the funded project, directing the research and reporting directly to the federal agency. And so they have this programmatic knowledge, this scientific knowledge that is going to move the activities forward. But the best PI is also intimately aware of the financial compliance because they understand what is actually going into the award. They understand if this specific scientist worked 40 hours on this grant or if he worked 30 hours on this grant because he was there with them. So it's really important that this PI have this knowledge, this fundamental knowledge of the grant requirements, and helps throughout to support the project both financially and programmatically.
So Jen and I are going to cover a lot of compliance requirements that come along with receiving an award. And so one of the first questions you might ask is, will I be audited? So there's a lot of different mechanisms that the federal government or oversight agencies use to monitor you. They can come in and do a program audit. They can do a desk review. They're maintaining constant contact with you, looking at the reports you submit. But one of the mechanisms that the federal government has of monitoring you is to make sure that you're following the compliance requirements is by imposing an audit requirement. Now, whether or not you're going to be subject to an audit requirement really is agency dependent. As Jen mentioned, there's 11 different federal agencies that award these type of grants, and each one establishes their own audit requirements. However, for the most part, the general rule is that if you have expenditures until recently over $750,000 a year, that you would have an audit requirement. There's some really good news. That threshold, as of earlier this week, so for fiscal year starting as of October 1st, 2024, that threshold has now increased to $1 million. So that will actually cause quite a few reductions in actual audit requirements for these type of grants. Now there's 2 types of, and what I will say is the most common grants we see or that we audit are primarily from, NIH, NSF, DOD, those, all, probably ones that you're familiar with that would have an audit requirement. There are 2 types of audits that you can have, and most commonly people will call me up and say, I need a single audit. Well, that might not necessarily be the case. A single audit is a very comprehensive audit. It is an audit of both the financial statements of the organization, so your balance sheet, your revenues and expenses, and then another audit of your compliance with the federal grant requirements. So it's actually 2 audits. Now that audit is only required if you receive funding from multiple different agencies that have an audit requirement. So if you're getting, both DOD funding and NSF funding, or NIH funding, then you might fall into having a single audit requirement. I very, very rarely see a commercial or for-profit organization that has fallen into that bucket. Most commonly, what you need is what's called a program-specific audit. And this is much less in scope than a single audit. This is where we're coming in and we're just testing the schedule of federal expenditures, so the amounts that you actually spent on the federal award, and then compliance with the various different compliance requirements that we're going to cover today. And so most organizations, I would say, fall into that category. So maybe you might ask, oh, I skipped. So GAAP for scientific investigators. What is GAAP, you might ask? Well, in accounting speak, GAAP refers to generally accepted accounting principles, and often as auditors, we'll refer to financial statements being in compliance with GAAP. And so why do you need to know what GAAP is? Well, if we're going to come in and do a program-specific audit, we're going to look at probably three key things in your organization from an internal control and accounting perspective. The first thing is, do you have an accounting system that is adequate enough to track your federal grant expenditures by grant and exclusive of other revenues and expenses that are happening within the organization? For most organizations, this is actually QuickBooks, and QuickBooks, you know, is a low-cost option that actually can meet the needs of most organizations. It can, but it definitely needs to be set up properly to make sure that you are tracking those expenditures at a detailed level and by grant, and also tracking what's going to be an allowable expenditure versus an unallowable expenditure. The second key takeaway probably from this slide is making sure you have someone that understands GAAP basis accounting. And this means that a lot of times things will get recorded on a cash basis, but when we come in to do an audit, it needs to be done on an accrual basis. And that means that you're recording in expenditures in the period that they're incurred and not necessarily in the period that they're paid. So an example of this is if you pay rent in December, but it's really for January, that's a January expenditure, not a December expenditure. So making sure you have a bookkeeper or an accountant that can keep track of things on an accrual basis. And then lastly, I would say of the items up here that are important is that every cost must be properly supported, whether that's by an invoice, a contract, a timesheet. There just has to be detailed support for each expenditure that's incurred. And you also need to have a system of internal controls in place where each of those are being reviewed and approved at an appropriate level. So what are the risks of non-compliance? What are the consequences? I'm going to say, in my experience, that unless there's a complete breach of contract or the grantee has been clearly reckless, committed fraud, waste, or abuse, that most granting agencies are most interested in just corrective action, like, oops, you made a mistake, or you didn't follow this exactly to the letter. Make sure they want to see corrective action is being taken and that there isn't future non-compliance. However, there are, they do have the ability to potentially impose special terms and conditions, do additional monitoring and oversight. If costs are not supported or documented, they could be considered unallowable, and they could require you to pay back certain funds to the grantor, and ultimately they could suspend or terminate the award if they feel that the non-compliance is significant enough. All right.
All right, so like many things in this world, a grant has a life cycle. And in general, we're talking about the pre-award, the award, the post-award, and the closeout phase as part of that grant life cycle. There are unique regulations that dictate every single one of these life cycle elements. So, and then again, we have the uniform guidance and we have your grantor specific. For instance, NSF has an entire manual on how to appropriately apply for, do the budget, do the narrative for their grants. So some of these agencies have additional materials that you need to follow and structure your proposals accordingly. They also have really great websites and webinars to help you get through that process as well. And then all of this happens all the way through after the award, where you're done, but you need things like a record retention policy, because the uniform guidance says you need to retain grant documentation, including support for your transactions, the time cards, all of that up to 3 years after you file your final financial report. So keeping that in mind, that you need to keep that information for up to 3 years. So following all the different life cycle phases. So some overview of the post-award requirements. So Candi went into this financial management system. It is a requirement that you have a financial management system that will help you track revenues and expenditures. So all the money coming in from a specific federal agency for your grants, all the money going out for your grant. It has to be able to track it by funding mechanism, by funding source. It also needs to be able to do budget to actuals, so you can compare budget to actuals to see where you are. That's part of your monitoring activities. And then that all of that can be found in one system. As you're going, I've seen a lot of organizations that maybe have their expenditures tracked in QuickBooks, but maybe they're still doing the budget to actuals in an Excel sheet. You want to document that, but ideally it is all in that system. It saves you from manual error. Cost sharing and matching. So sometimes you might get a grant that says, you put in 100,000, we'll put in 50,000. And so the federal agency is going to give you 100,000, and you're going to give 50,000 in some, maybe in personnel expenses from another entity. Something else is going to come into this award. The whole $150,000 is considered part of that award. So keeping that in mind, that you also need to track where that match is coming from and document that just like any other expenditure, because the auditors are going to come in and they're going to audit it just like they would audit any other transaction. Additionally, with matches, you can't have the same match for 2 awards. It's a one-to-one relationship. So you can't have $50,000 in payroll costs for scientist A that you're also going to use for another grant. It's a one-to-one relationship here. What else? Program income. Maybe you're going to make money as you go with your grant. And what does that mean for your organization? That should be in your budget. As you're going through, that should definitely be something you talk to your grant administrator about. And also, it can be treated that it's an add-on to the award. So maybe we're talking about that $150,000 award and you make $25,000. So now maybe your award's $175,000. Or it could be treated as the government saying, great, you made $25,000, now I'm only going to give you $75,000. So you need to know how the government's going to see that program income and how they're going to treat it. Budget and program revisions, reading your grant agreement. Every federal agency is different. We talked about this where you excuse me, you have some leeway in how you move costs around, and sometimes there's a cap from the federal agency, so knowing what that cap is, maybe it's 25%. You have a flexibility to move costs around up to 25% of the total budget, or maybe you can just move it around as you like. But remember, scope is always something you need to be communicating with them about. Allowable costs we'll go into a little bit later. Property standards, if you're buying a telescope for $100,000, you're going to need to track that. Where is it? Do an inventory of it, have policies and procedures around that, and have documenting materials to say who paid for it, that type of thing, and keep track of that, because that's also something the auditors will be looking at. And then procurement standards, which we'll talk about a little bit more later. All of this to say, one of the key crucial internal controls related to federal compliance, and one of the things we see most often is just a lack of policies and procedures. You need to have them written down. You could be doing a 100% perfect job on your grant in every aspect, but if you don't have these things written down, that is a problem. So please have written policies and procedures for these areas of compliance. And then ongoing monitoring and risk assessment, making sure that you're keeping an eye on things, looking at those budget to actuals as we talked about, and just making sure that everything is happening as anticipated within your program, and that you're communicating any changes that are happening along the way to the funder. So some additional common SBIR compliance problems that we see Our time and effort reporting, Candy's going to talk about that a little bit later. That's your time cards, your time sheets. Unallowable costs, there are a few costs that are just non-negotiable or unallowable. We'll go over those. Overcharging of indirect costs, misuse of funds, inappropriate drawdown of funds. That's when you're going to probably the payment management system and drawing down your dollars for the award to cover your costs, and you're not doing that appropriately. So that's one. Misallocation of cost, accelerated expenditures. That's kind of what Candy was saying, when you're paying for something out of the award that maybe happens at a later date. But like rent, maybe you pay for 6 months of rent all up front, you pay for it out of the grant, but only 3 months of the rent are actually going to fall under the grant period. That would be one of those accelerated expenditures. Conflict of interest issues, unsupported cost transfers. So maybe you have 2 grants and you're like, man, I actually think I could use a little bit more money in this grant, so I'm just going to move this over here. You need to have documentation around that. Why are you making that move? Is it a valid transfer of costs? Inadequate subrecipient monitoring. So maybe you have a partner that you're passing through funds to that is not a contractor because they're actually doing programmatic initiatives. They would be considered a subrecipient. And then that's a whole nother level of things that you have to do to make sure that they're doing everything in a compliant manner as well. Lack of support for specialized services, facilities cost, delinquent reporting. I want to tell you the most important thing to do is to get your reports in on time. They can be inaccurate as long as you go back and you know you're going to revise them, but hitting that due date, no matter what that looks like for you, is your number one initiative. Because you can always revise the report, but it needs to be in by the deadline. Improper procurement, and then that fixed asset records not properly maintained.
It's a long list, and we're going to get into a lot of these, like how do we stay out of trouble, and we'll go over the compliance requirements for many of these key points here. But what is contributing to problems? And a lot of times is that you just get moving too fast and you're not, you need to kind of take a step back before that award comes in and evaluate, do I have adequate resources to properly manage this grant? In a lot of situations, we also find that, cost control is a big component. So maybe a lot of times the PI wants to take on a lot of the oversight of the grant and also maybe doing a lot of the accounting. And you have to evaluate if that is going to be successful for your organization or not, or if you need to bring in other resources to make sure you have an adequate system of internal controls in place, adequate accounting. You have people that understand federal grant compliance, or you have professionals that you can go to and ask questions of. So I think, overall, the list is here. We're going to get into a lot of this, the number one finding that we normally come across is that time and effort reporting. So I think it's important that we spend some time there. But really, just making sure you're thinking ahead, getting those written policies and procedures that Jen talked about, making sure you understand the key compliance areas, and making sure you have systems set up ahead of that grant coming into place. Because one of the things that happens when you're under audit is if we come across an issue, it's normally going to be reported as a finding because we can't go back and fix it. We can't go back and fix that you didn't do time and effort reporting, or that you didn't properly go through the procurement process, or you didn't do subrecipient monitoring. So we report it as a finding, and then you have to fix it going forward. Best to try to avoid any findings in the first place. All right, well, let's get into allocation of payroll costs. So this is really, at the top of the list when it comes to compliance issues, which probably makes sense. It's usually one of the largest budgeted items on a federal award. So we want to just make sure that we spend a few minutes going over what the documentation requirements are. And this relates to charging both direct costs and indirect costs to an award. So don't think that you just have to keep track of what you're charging to the award. You actually have to keep track of all time and effort that is being incurred by that individual, regardless of whether or not it is being charged to the award or not. Another thing to take note of is that commercial entities are actually held to a higher standard than not-for-profit entities or entities or higher education entities. So if you've worked in the nonprofit or university research world and you say we did it this way, don't necessarily think that is the requirements that are going to be imposed on you as a commercial or for-profit entity. So, for-profit entities' salaries and wages must be supported by daily after-the-fact time and effort reports. So, daily after-the-fact time and effort reports. And as I said, they must include time charges for both direct program activities and any other activities expended by the organization, including compensated absences. So, day by day, very detailed. And I know I keep repeating this, but it's very important because we see compliance issues with this all the time. And so we just want to make sure it's very clear. And so the term after the fact means that it has to be based off of actuals. It can't be based off of budgets or average over time or any method. It has to be based off of what the actuals were incurred on a day-by-day basis. And you know, for an employee that might work 100% on the award, that's going to make tracking it very easy. You know, you just put down grant A, 8 hours, 10 hours, 7 hours, very easy to track and to charge that grant time. But when you do have people that have multiple functions within an organization, it gets a little bit more tricky. The second main takeaway from here is that very last bullet is that the time and effort report needs to be certified by an authorized representative within the organization. You know, usually that's the PI or some sort of manager level employee that is responsible for oversight of the grant. And I would say as a best practice, what we typically recommend is that both the employee and the supervisor certify the time and effort reports. Oh, and I guess I'll make one last point, and Jen kind of brought this up, that if there are any changes that are made subsequently, let's say you do a cost transfer or you just, you know, you looked at it again, you said, oh, well, that might not be an actual reflection of the distribution of time. You need to go back and update that time and effort report and document the reason that you're changing it, and it needs to be recertified. So if we come in under audit, we can see, there's an audit trail of why that change occurred. And we didn't say this, but if there's any questions, there is a mic in the back. Just raise your hand and we'll get you, okay? So I'm not going to spend much time on this. I'm sure you guys know what a timesheet looks like, but this is just an example of what one would look like if you're tracking it by grant. You know, it's got the day by day for each day of the month, the project, how much is being spent on indirect, vacation, holiday, sick leave, and other. And then very importantly, it has at the top that an employee is signing it and a supervisor is signing it, and basically saying that they're certifying that this is an adequate reflection of their actual time incurred. All right. So just for fun, we'll do a little bit of an example. We'll see how we do here. So just because this is a common example of what we see. So I just actually had an example of this last week, that when someone went out and applied for their grant, they took the person's salary, they divided it by 2,080 hours, and they came up with an hourly rate. And then they, you know, went about their business throughout the year, and they tracked the hours incurred, and they took the hours incurred and they times it by the rate, and that's what they charged to the grant. Unfortunately, that doesn't work. You can't do it that way. You have to do it based off of a percentage of total hours incurred. So in this example, we have a salaried employee who works a standard 40 hours a week, and the effective pay rate is $10 per hour or $400 per week. But suppose, which this does happen quite frequently, you know, most people in the startup world might not work only 40 hours a week. It might be 50 or 60. That in this week they worked 50 hours and 40 hours were on an NIH grant, but 10 hours were just on managing the business or other indirect activities. So in total, they worked 50 hours on the grant. How much should be recorded on the timesheet is the first question. Anyone know the answer? How many hours should we have on the timesheet? 50 hours, right? They worked 50 hours. We better see 50 hours on the timesheet. And then how much salary should be charged to the NIH grant? Should $400 be charged to the NIH grant? 40 times 10? $320. Whoever said that is absolutely correct. So you take basically since 40 divided by 50 is 80%, you would charge 80% of the $400 to the federal grant. So it would only be $320. So just keep that in mind of how you would have to kind of do some math to get to the actual amount that you could charge to the federal award.
The federal government only wants to pay its fair share. So that is the reasoning behind that. They don't want to pay a penny more, and that represents their fair share of the total effort of that employee. So that's the thought process behind that. So this is our one slide on contracts, and it's just to let you know, as I've said, there's a difference between federal grants and federal contracts. Federal grants are mostly operating under the uniform guidance. Federal contracts are operating under the federal acquisition regulations. They're a little bit more robust. Thankfully, there is a lot of overlap and a lot of similarities, especially around the cost principles in the treatment of costs, but that is to be aware that they are two different things, and you will have to follow one or the other depending on the funding mechanism. A lot of NIH awards specifically are considered contracts and follow the FAR. Typically, they're on a cost reimbursement basis, which means that employee that worked $400 worth of work for you, you're going to put that money up front, and then you're going to submit basically your receipt to the federal government to be paid back for that amount. Different set of cost principles, but again, luckily there's a lot of overlap there, different classifications of costs, different allowabilities of cost. It's built way more, the FAR is built way more for profits, whereas the uniform guidance is really for not-for-profits. So you'll see a lot of difference there when it comes to that. And then again, specific award considerations. So when it comes to costs, there are certain things, regardless of the cost, that have to happen to make them allowable and chargeable to an award. So they have to be reasonable and necessary to the award. You can't maybe take everyone to Disney World for a federal grant because that's not really helping you advance your activities under the grant. So they have to be necessary to the activities under the grant. Now maybe there's a conference for NSF that you need to go to as part of the grant, happens to be in Orlando, so there's some differences there, but these have to happen, have to be necessary for the grant. They have to be allocable, which is really saying that you have to be able to trace them back to the specific award you're charging them to. Like in that payroll cost, that payroll example, you're charging the 80% to the grant and you're allocating the other 20% to indirect. So making sure that you have that allocation and they're allocable to the award. Consistency, you have to treat all similar costs the same. You can't say, well, in this instance, it's going to be direct, and in this instance, it's going to be indirect. It has to be consistent. And then conformance, which we'll talk about in a second. Any applicable credits are also run down to the grant. So if maybe an item that you're purchasing is $100, but you get a $20 rebate, that rebate needs to go back to the grant. Advanced understandings, making sure you understand the different items of cost. Conditional exemptions, maybe there are some exceptions to these items of cost, again, because of your federal agency or maybe because of the grant you're operating with and you have just a different term in the grant agreement that allows you to do something a little differently. Supported, you have those receipts, you have your backup, your due diligence is tracked and monitored, that's all happening in your documentation and you have that support there, and then that they were approved appropriately internally based on your written policies and procedures. If it says you need 2 signatures for something over $10,000, the auditor is going to want to see those 2 signatures. Sorry. Reasonable and necessary. So what does that mean? What is reasonable? So it's what a prudent person would say was reasonable. If you're paying $100 for a pencil or a hammer, that's not necessarily reasonable to the average person. So making sure it's a reasonable and prudent cost. It's needed by the company or the grant. It's in compliance with your internal policies. So we have thresholds in the uniform guidance. If you set your thresholds lower than that, that is A-okay. If you set them higher than that, we have a problem. But whatever you set it at, that's what you have to follow. And you will be audited to your thresholds and your standards. So keeping that in mind, they have to be in compliance with internal policies. And then prudence on the part of the responsible individual so that they're reviewing and approving it all looks good based on the budget, based on the understanding of the award. Allocability. So again, this is that allocation. So cost objectives specific to the grant and the function and the department, all of that, no matter how you have it broken out in QuickBooks, you have it broken out and charged accordingly, this grant. Maybe it's a computer, but this computer is going to service 3 different grants. So you're not going to give all of it to one grant. You're going to break out that cost of that computer maybe across 3 grants, depending on how you have your allocation set up. A cost is allocable to a cost objective if it's incurred solely to advance the grant work, benefits both the grant and other work of the company, and necessary for the overall operation of the company. These are kind of what make it reasonable and an appropriate allowable cost. Consistency, we talked about this as well. So grantees must be consistent in assigning costs or cost objectives, allowable or unallowable, direct costs or indirect costs. So if you are charging something as direct for one grant, it should be direct for another grant as well. It shouldn't just flip-flop between the 2 different types of cost pools. And then conformance. So what does your award say? So we've talked about the uniform guidance pretty much in the other slides. This one is really what is your award saying to you? So what are the limitations and exclusions of the award? Sometimes awards say you can't travel under our award. So there should be no travel costs to this grant. Or maybe you can travel, but it's only to this one training that we offer once a year in Philadelphia. That's the only place you're allowed to go. It's the only place that's valid. All your support will be there. There should be no other travel costs that we see in this grant. And that would be a limitation or an exclusion under your award that you would know about in advance because it's in your grant agreement, which you read and you understand back to front. Varies by type of recipient and award. Again, this can change. That's why that grant agreement is so important. Generally, most costs are allowed. We're going to go into when that is not the case here in a second. And then if ever in doubt, consult your grant administrator. Consult your GMS because they're going to be able to tell you. And there are certain costs that are allowed as long as you ask nicely in advance. So there are certain costs that you need to know and be aware of that you ask for. And then if it seems reasonable and you have it in your budget, then you can get the blessing. A lot of times equipment is one of those things that you need to get a little special permission for. So keeping that in mind, costs of that nature. If you want a subrecipient under a grant because you need to spread this programmatic love out across a couple of different entities, you're gonna need to get approval for that in advance. All right, allowability of costs, things that are unallowable, pretty much without, there's no way really to go to your grant administrator and ask special permission for these things. It's pretty much a hard and fast rule. But things that are unallowable, alcoholic beverages. We don't want to see alcoholic beverages in your travel receipts. If an auditor gets in there and looks at the receipts, maybe you reimburse by the receipt and you didn't realize that a beer was on that receipt and you've reimbursed the person for the whole receipt and the auditor sees that, that's an unallowable cost. Yes?
And if you take out the beer, the rest is okay?
Absolutely, yes. If you take out the beer, the rest is okay. But you have to keep track of that. That's why a lot of people use per diems, because then you don't care how people spend their money. You gave them the money. It's a per diem rate set by the federal government. Then you don't have to look at receipts. So sometimes people don't do that because they don't want to, that's too much money. They just want to reimburse by receipts. That's fine, but that's the risk then that you take when you do it that way. Bad debts. Building acquisitions, generally buying a building, contingency costs, entertainment, fines and penalties. If you forget to, file your taxes and you get a penalty on your taxes, that's not going to be covered under your grant. Fundraising, so a lot of times that includes website costs because you have a little submit, if you want to fund us, go here. So a lot of times website costs are kind of included in that fundraising bucket, so be aware of that. Honoraria, independent research and development costs, and then lobbying. So that's a big one too. There are a lot of certifications that you will sign as you go through the grant life cycle that say you will not conduct lobbying with the federal funds. And I will pass it off.
Okay, we are in the home stretch. Just a few more topics to cover. So to round out our discussion on allowable costs, we did want to just briefly touch on what can you charge for indirect costs. So when you apply for an SBIR Phase 1 award, you as the organization don't have to have a negotiated indirect costs rate. This is where you're going and getting basically an approval letter of what your indirect cost rate will be that you'll charge the grant. You get to basically designate up to 40% of how much you want to charge for indirect costs. And it's pretty much a gimme. However, the caveat is that you still can't charge more than your actual indirect costs. So, so you do need to go through a process of determining what your actual indirect cost rate is, whether that's 15%, 20%, you can go all the way up to 40% and have that included in your award. But if you're subject to audit, we're going to come in and calculate what your actual rate is. And if you over recovered, we're going to say that's an unallowable cost. Now, when you get to Phase 2, you are allowed to go out and negotiate a rate, and sometimes 40% might be too low. So you need to have a rate of 50%, 60%, 70%. A lot of my nonprofit research institutes, they have very high rates of like 80 or 90% perhaps. So it's not uncommon for the actual rate to be over 40%, especially if you're doing a lot of lab work. Those labs are very expensive, or vivariums and all of that. So. But the moral of the story is just making sure you're tracking those actual costs that you're incurred, that you're tracking a pool. And this goes back to when Jen was going over the unallowable costs. So we're going to come in and say, give me your indirect cost pool. And have you even gone through that and made sure that there's not, costs in excess of the NIH salary cap, or the alcohol in there, or fundraising, or just any type of those type of costs are in the indirect cost pool either. All right, moving on to procurement. This is another one of those areas that organizations tend to get tripped up on. And a lot of it is just using vendors that you're familiar or comfortable with, and not really thinking through, is this going to be subject to a procurement process required under the Uniform Grant Guidance. So the key to success in this area is just making you understand what the procurement rules are, and having that written procurement policy. So, and that will help you, okay, we have a procurement policy, we've established these different thresholds that are required in the policy, and this is how we conduct our procurement process. And so you have basically a guidebook to walk you through this. Now, the uniform guidance has become really prescribed in this area, and there's 3 general levels of procurement. One is there's a micro purchase threshold, there's a small purchase threshold, and then those above the small purchase threshold, and we'll go through each of those a little bit more. The micro purchase threshold, most expenditures are actually going to fall within this category. And it applies to purchases which in the aggregate by vendor do not exceed $10,000. Now, some entities are going to have the ability to raise that threshold to $50,000. You have to be a low-risk auditee, which we're not going to get into today. Basically means that you've had at least 2 audit program audits or single audits. So you're not a low-risk auditee till you've at least had 2 clean reports, and that you have it's written into your policy that your micro purchase thresholds greater than $50,000. But most organizations, especially in this realm, are going to be playing in the space of using the $10,000 micro purchase threshold. So anything between the micro purchase threshold and the simplified acquisition threshold, which is currently $250,000, is considered a small purchase. And then, of course, there's going to be those large procurement purchases for amounts that are greater than $250,000. So how do we utilize these different thresholds? Well, anything that is considered a micro purchase, those that are 10,000 or less in aggregate, you can basically make without having to do too much homework. Or you don't have to go out and solicit bids or do price quotes. You just have to make sure that you're using good judgment and you're avoiding conflicts of interest. Now, for those small purchases, those between the micro purchase threshold and $250,000, the requirements are a little bit more elevated. And now that you are required to obtain just an adequate number of price quotes during that to make those purchasing decisions. You might ask, well, what's an adequate number? Well, that's not really defined, right? It's really a judgment call. And so you need to just make sure that you've done a decent amount of homework and that it all comes down to documentation. I'm going to say that over and over again. So we're going to come in and say, what process did you go to? Well, I went out to ABC. I got these different price quotes. And how did you make the decision on who you selected? And you don't necessarily have to go with the lowest price, but you have to have a process that you went through to make your ultimate selection. And then lastly, those are those large procurements over $250,000. These do require a more formal process that includes public advertising and making sure you're getting sealed bids and such. Now, there are 4 exceptions to when you don't have to do a competitive bid process. And this actually comes up a lot in the Research Institute. We call it sole sourcing, but it comes down to making sure you're documenting while you're sole sourcing. So here are those most common exceptions. The first one's actually not an exception. It's just that by default, it's under the micro purchase threshold and you're not required to get price quotes or bids. So the most common thing we see is that what you're procuring is only available from a single source, right? So you literally cannot get the goods or services that will meet your needs from anyone else or anywhere else in the world. And so this is probably the most common reason we see documented of why you would need to go with a sole source. But again, it comes down to making sure that you document that and that it truly is the case that you have to sole source this. The second one, in a public emergency, obviously you need to expedite that purchasing decision and you don't have enough time to publicize it and allow for competitive bids. So that's another exception as long as you document it. The third one, you have a written permission from the awarding agency to forego a competitive bidding situation. And then lastly, you went through the procurement process and there's just inadequate competition. You only get one response. This doesn't require you to have to go redo the process. You can keep the documentation showing you attempted to obtain adequate competition and no one responded. And this is probably more common one that this is probably also a more common one where you're just not getting adequate response to the competitive bidding situation. Any questions on procurement? All right. One last slide. This is just on subrecipient monitoring. So this is where Jen talked about you have a partner that you're working with on this grant award. You're the prime recipient. You've sub-awarded out some of the programmatic work to another organization, whether that be a for-profit or not-for-profit. And by doing that, you have now certain roles and responsibility for monitoring their compliance with uniform grant guidance. And so the first thing you want to do is when you do that sub-award agreement, there's certain things that are required to be in that agreement. So making sure you understand what those requirements are, you have a checklist and that the sub-award agreement communicates to them what their compliance requirements are. The second thing is having some sort of risk assessment, that you've gone through a process of how you determined the subrecipient. Have you reviewed their single audit history? Have you got an understanding of their internal controls, their policies and procedures, and determined what type of monitoring you need to do to oversee them? And then again, making sure you're documenting both what your subrecipient monitoring policy is and what's your the actual risk assessment and procedures you've done to monitor that subrecipient. And the last thing I'll just mention on this is that if they do have a single audit or a program audit, you are required to get that and review it and to determine if any findings in their report relate back to the funding that you gave them. And then you have to issue a management decision on what follow-up or corrective action they need to take to rectify the non-compliance. So with that, I think we're done. We've included a slide in here on just some additional resources available. The NIH grants policy statement, that's a great document. We use that all the time. NIH welcome wagon. If you want to dive into the CFRs, that's the first link there. And then also on here, we do have some webinars that dive into each of these topics a little bit more that are recorded and on our website. Okay. And we have 5 minutes for questions. Yeah.
So regarding accounting, would having, you can't bring in like an accountant, would having someone with this experience on your board of advisors be just as beneficial or just like as, I don't know, serious?
I think if you don't have that body of knowledge in-house, to have someone on your board with that knowledge would definitely be a step in the right direction, absolutely. And you may want them to be more intimately involved in some of the approval process and reviewing grant agreements when they come in. So there would definitely, it would be more of a working board member, but yeah, I would recommend that, absolutely.
And versus bringing someone in-house, like how do you kind of?
I think it depends how much funding you have. If you have one grant and it doesn't meet the single audit threshold, then maybe the board member, once you have your policies and procedures in place and that's been thoroughly reviewed and is good with the requirements, then maybe that board member would be sufficient. But if you start to hit that single audit threshold, I think it's time to bring someone in-house. And just as a reminder, you have to follow the uniform guidance regardless of the audit. It's just that the audit's really going to uncover any areas where you're not. But you could still have a desk review from a funder, and they could still come in, and even though you're at a $300,000 award, they could still come in and do the same thing, and they're going to dive way deeper than a single audit would. So it's important to follow these regulations regardless.
Thank you.
Mm-hmm.
First of all, are these slides available online somewhere?
We can certainly make them available, and I think they're filming, so you can go back and revisit this as much as you would like.
Okay, great. And then my real question was, you had a list of, I guess it was conditions for avoiding scrutiny on indirect costs, I think.
Oh, okay.
And there was a very long list, and I couldn't tell if they were ands or ors between them. No, maybe I should just.
Was it the list of unallowable costs?
Yes.
Oh, okay.
Yep.
Those are ands.
Okay.
Alcohol and fundraising and lobbying. Yeah, all of that is unallowable.
Okay. All right. That's kind of what I thought. I just figured it needed clarification. Thanks.
What kind of software do you recommend for GAAP or accounting? Thank you. Yes, Tom.
So if you're looking at a financial management software, QuickBooks Online for a smaller level entity is going to be just fine. Just make sure you're using, I think it's the projects funding function that allows you to break it out by award, because you do need to track by award. As you get larger, you can also use class, but I think the project's actually better. As you grow, and this is an internal decision, it's probably time to look at a more robust tracking system, like Sage Intacct or MIP, something along that area. I will say QuickBooks Online is growing and expanding every day, so there's a potential that that they may grow and keep up, but right now there is definitely a threshold where it's time to look for something more robust.
Hi. Ooh, you talked about the competitive bidding process. In my experience, it's usually the institutions or the companies that enforce the competitive bidding process. Does that, is that uniformly apply to grants as well? Will any sort of federal or government grant enforce the competitive bidding process?
Over $250,000, yes, that would be very universal.
That was
yeah.
the limit I had to. And it was, when I went through it, was mainly enforced through my institution, and we tried to sole source it for accessible software and hardware, and they wouldn't let us. So that was interesting, trying to go through that competitive bidding process. It can be tough. So.
Mm-hmm.
All right, I think we are at 1 o'clock. Jen and I are happy to hang around and answer any additional questions you have, but we'll turn it back over for final comments.
Thank you all for joining us today, and a big thank you to Candi and Jen. Next Friday at noon, angel investor Magnus Christerson will talk about balancing the investor and founder perspectives. Sign up today, and we'll see you next week.